Cross-border payments are at the heart of much economic activity, including international trade, tourism, and e-commerce. And for many who depend on remittances from their family members living abroad, there are much more. They are an economic lifeline. However, for far too long, cross-border payments have faced four key challenges. They're very expensive, they take very long to be processed, they're difficult to access, and there is insufficient transparency in these transactions. That is why the G20, the group of the world's largest economies, called for action to make cross-border payments faster, cheaper, more transparent, and easier to access. G20 lined out a comprehensive roadmap designed to make a real difference. One forward-looking part of the G20 efforts is to harness the potential of new payment systems built on central bank digital currency, or CBDC. While issuance has not been decided upon in most countries, many are seriously looking into their development.
Blockchain technology is becoming more and more important. Ripple and Stellar proved that their blockchains are working. They're safe, they're stable, they're cheap to use, they're fast and scalable. The XRP ledger and the Stellar Network are going to be used by central banks.
Interest in CBDCs has grown in response to changes in payments, finance, and technology, as well as the disruption caused by COVID-19. A 2021 Bank for International Settlements survey of central banks found that 86% are actively researching the potential for CBDCs, 60% are experimenting with the technology, and 14% are deploying pilot projects. In simple terms, a central bank digital currency, or CBDC, could be used by individuals to pay businesses, shops, or each other with a retail CBDC, or used between financial institutions to settle trades in financial markets as a wholesale CBDC. Central banks are exploring whether CBDCs could help them to achieve their public good objectives, such as safeguarding public trust in money, maintaining stability, and ensuring safe and resilient payment systems and infrastructure. If successful, CBDCs could ensure that as economies go digital, the general public would retain access to the safest form of money, a claim on a central bank. This could promote diversity in payment options, make cross-border payments faster and cheaper, increase financial inclusion, and possibly facilitate fiscal transfers in times of economic crisis, such as during a global pandemic. The Bank for International Settlements Innovation Hub intends to contribute to this area through applied technology research, proofs of concept, and prototypes with central banks around the world. One such project is the Multiple CBDC Bridge. The Multiple, or MCBDC Bridge, is a wholesale central bank digital currency co-creation project involving the BIS Innovation Hub, the Hong Kong Monetary Authority, the Bank of Thailand, the Digital Currency Institute of the People's Bank of China, and the Central Bank of the United Arab Emirates. The project, first initiated by the Hong Kong Monetary Authority and the Bank of Thailand under the name Inthan and Lion Rock, was renamed MCBDC Bridge upon the joining of the BIS Innovation Hub Center in Hong Kong, the Digital Currency Institute of the People's Bank of China, and the Central Bank of the United Arab Emirates, announced in February 2021. Its aim is to propose solutions and concepts to alleviate the current pain points in making cross-border fund transfers. These include inefficiencies, high costs, and complex requirements for regulatory compliance.
On Stellar itself, you have, tokenization allows you to trade all sorts of tokens. It can be CBDCs, central banks can issue CBDCs on your platform, if I understand it correctly.
Thank you so much. There's so much to say on this, but I'll just say two things that I think are really important. The discussion that was just had a few moments ago about not likening this to the internet and being careful of permissionless networks, we have to remember that you're comparing this to Libra, which is a very different thing than what we're trying to focus on. Permissionless networks are the infrastructure layer that allows entities to build on top of them and to innovate and to create awesome ideas and to create products that are going to solve these problems that folks have all over the world, and they're going to solve financial inclusion because you can do it on your phone. You can make it so that people don't have to have bank accounts, and you can do it in 3 to 5 seconds. The comparison with the internet is that infrastructure layer, that technology layer. The notion that the AML and all of the different regulations need to apply here is absolutely agreed upon. And those financial institutions that touch fiat on the edges are the ones that are regulated by all of the different geographies. So we cannot forget that is the important piece of this. That is what creates the interoperability. That is what makes it so that this all works seamlessly. That is what makes it so that I could send Renee a payment to Germany and to do that in 3 to 5 seconds, and to still use the existing financial infrastructure, but to use these new rails which make it faster, seamless, and usable for the developers and the end users. So that's just an important point I want everyone to know. Governments are exceptionally good at regulating fiat. We still want them to. Thank you.
Years ago, Lou Gerstner wrote a great book, the former CEO of IBM, asking, who says elephants can't dance? And in many ways, that's the same challenge for central bankers today. Who says that central bankers can't be cool? Because what we've seen unfold in the last couple of years in relation to digital currencies and other forms of innovation in finance is really quite remarkable. To many people, looking at what's happening with Bitcoin, Dogecoin, all of the dramas around Elon Musk, it looks pretty terrifying. To others, it looks pretty inevitable and something that investors of all stripes and policymakers will need to embrace. But what we're certainly seeing at the Financial Times is obsessive interest amongst our readers in these developments and innovations. In fact, I often joke that Bitcoin for the financial markets is a bit like Kim Kardashian for everyone else, which is a story that grabs eyeballs immediately. So what are central bankers going to do? If you can't beat them, are they going to join them? Are they going to try and displace innovations like Bitcoin? Should they try and curb them, as India has announced just this morning with its new bill to try and ban cryptocurrencies? How exactly should the policymakers respond? And what about other innovations like AI?
The only one who can bring that to the table in a forceful way is the central bank, is our central banks. And given that we have the technological capacity to do it, I think that the best possible solution is for central banks to put on the table central bank digital currencies. That doesn't mean that there is no space for collaboration with the private sector. As a matter of fact, for me, a preferable scheme is a tier system where central banks provide the basic currency, but then the private sector can build on that. I'll stop here.
Right. We already have one CBDC so far in the world, which emerged from the Bahamas. You've done a fascinating survey just recently of central banks, which show that most are working on it, but you say that about 1/5 of the world's population will be in a country with a CBDC in 3 years' time, according to this survey. Do you think we're going to see CBDCs emerging as a serious force in the next 2 or 3 years, you personally, when you look at the discussions going around the BIS Innovation Hub?
Most central banks are approaching this not as a race. I think here this is a huge step forward. CBDC is something that has tremendous complexity, and there is one particular issue. It cannot fail. It cannot fail at any particular point in time. And to assure that type of resiliency, it takes a lot. It has many implications for the architecture of the financial system, for monetary policy, for monetary policy implementation. So it's the type of thing where there doesn't seem to be a real urgency for a CBDC to be put on the table tomorrow. What is necessary is just to have a medium-term horizon, but make sure that it's top quality and that there is no room for mistake. So as it has been said before, this is the type of problem where it's better to go slow because we are in a hurry.
Right. Well, Raymond, I'd like.
Let me just take a step back and say that our work on CBDCs is not primarily motivated by the appearance on the scene of cryptocurrencies and stablecoins. It really is fundamentally, technology has made it possible for us to offer a new form of trusted money and that sovereign anchor that has been so important for economic development for a very long time. And we're looking carefully at whether to do that. So turning to your question, crypto assets, which we call them crypto assets, they're highly volatile, see Bitcoin, and therefore not really useful as a store of value, and they're not backed by anything. They're more of an asset for speculation. So they're also not particularly in use as a means of payment. It's more a speculative asset that's essentially a substitute for gold rather than for the dollar. And I think with crypto assets, the public needs to understand the risks. The principal thing is there's the volatility. There's also the outsized energy requirement for mining, and the fact that they're not backed by anything, which I mentioned. Turning to stable coins, so to the extent a stable coin is backed by sovereign currencies of leading nations, that's certainly an improvement over crypto assets, I would say. But nonetheless, where does the credibility come from? It comes from that sovereign currency that is the backstop. The thing is, existing sovereign currencies are issued with the benefit of the public in mind. The potentially fast and wide adoption of a global stablecoin, potentially a global currency governed only by the incentives of a private company, is something that will deserve and will receive the highest level of regulatory expectations. And is regulation where it needs to be on global stablecoins yet? It's not, but we're making progress. Nonetheless, stablecoins may have a role to play with appropriate regulation, but that role will not be to form the basis of a new global monetary system.
At the same time, cryptocurrencies and stablecoins have emerged as a new class of assets that are sometimes claimed to be also a medium of exchange, despite their volatility and concerns about their security. Widespread adoption of these digital currencies by the general public could also diminish the use of the sovereign currency and even affect a central bank's monetary operations. Notwithstanding all these developments, the core role of central banks in ensuring trust in money as a public good for the economy at large remains unchanged. So whether central banks should provide a new form of central bank digital currency, complete with new payment infrastructure to households and business, has become a very pertinent question.